folks, it's Matt Hayson here looking at everything going down in and around the Sydney property market this week. And as I've started to see is this really reliable pattern emerging over the last several weeks between buyers and sellers and the trading conditions. And that's playing out very much across the auction market, where last week we saw 1,281 properties due to go under the hammer for the week across Sydney. And this is where we're seeing the consistency is what's unfolding with those auction results. And we saw roughly 30% of those properties actually selling under the hammer and another 25% or so which sold prior, providing an overall clearance rate sitting at 53.6%. Also, the rental market, we know it's very tight. That closed off the month with a vacancy level in Sydney sitting at just 1.1%. And also rents are continuing to edge forward, with the average weekly rental in Sydney now sitting at $1,054. So certainly a little bit of pressure sitting around that space as well. Now, the great cash rate debate continues. During the week, the latest US data came through that inflation had just edged up forward, moving from 3.1 to 3.2%. Their target range is 2%. Now, as a result of that, that's dashed any hopes that the rate cutting cycle in the US would start in May. Now, that's been pushed back to June. Very interestingly for us, we tend to mirror a little bit of what's unfolding in the US, so it's quite important to watch and monitor what happens in that space. But here in Australia, could our RBA be misreading the economy? Certainly, we all know over the last several years there's been plenty of evident examples of the RBA misreading and giving us poor advice around the economy. But looking at the latest data, Australian labour market has deteriorated far greater than the RBA had forecast. Also, the number of hours Australians are working has collapsed in the last 6 months, and employment demand and job ads are falling as cash flow constraints are really crippling a lot of businesses around the country. But then we've also got this mass migration policy, and CBA data suggests we need to be creating 35,000 jobs per month in order to soak up all the new people coming into the country. But the unemployment rate is currently sitting at 4.1%, but we've got 11 months remaining before we hit the peak forecast from the RBA at 4.4%. So it looks as though we're going to well overshoot that mark, and sooner as well, where unemployment could be sitting at 4.8%, if not even 5%. We've also seen Australian consumer and consumption spending really deteriorate as well, and that's plummeted as Australians really tighten up their spending, and that's come in below forecast as well for the RBA. In fact, every metric that the RBA are looking at has come in worse than the RBA had forecast. So this is really paving the way for cash rate cuts later this year. We already know that the CBA are forecasting 3 cash rate cuts of 25 basis points kicking into gear from September, and for many people, they can't come soon enough. And then finally this week, as I've been reporting, it's the prestige property market, which is the shining light and the best performing sector of Sydney's property market over the first several months of this year. And that continued this week with the sale of 26 Gipp Street in Birchgrove for this prestige and beautiful family home, 4 bedrooms, 3 bathrooms. As you can see in the images here, what a lovely back garden, a pool, due north aspect. Now, this property attracted incredibly strong demand and interest, with very solid offers coming forward pre-auction. And the property did sell prior to the auction, which was due this weekend, by Danny Cobden and Samantha Elvey for around that mid-7 range, which is an exceptional result for an impeccable home. So that's what's unfolding in and around the property market this week, folks. In fact, we've got some great homes online and open and available this weekend, and our entire team looks forward to seeing you out and about. Thanks for watching, and I'm going to catch you all next week.